Good morning, Paul George from Allendale. It's January 12th, 2011, and the USDA did release their reports here at 7:30 this morning. Pretty much across the board, it's food for the bulls. The the numbers came out, in most cases, better than expected by the trade. We'll start with the yield. Yield on corn, 152.8. Trade was expecting an average of 153.9. That's versus a year ago, or the December number of 154.3. So in drop there, a drop in the soybean yield down to 43.5 from last month of 43.9. That put the total production of corn at 12,447,000,000, down from the 12,540,000,000 they were looking for last month. That's 100 million bushel less. Soybean about 45 million bushel less at 3.329 versus 3.375 last month. And the trade estimate was right on that last month's average. Winter wheat planted acres, 41 million acres, just a few acres less. That's less than what the trade was expecting, about 200,000 acres less than the trade was expecting, but quite a bit more than a year ago, where we only planted 37.37 million acres of wheat. The ending stocks number is a big surprise as well. The trade was looking for an average there of, where am I at on ending stocks? Trade was looking for corn at 778, came in at 745 versus 832 a year, or December of last year. The wheat, 818 versus an 842 estimate, and the soybeans at 140, which is really getting down there from a December estimate of 165. They did lower the Argentina crop on corn, down 1.5 million tons, from 25 million metric tons of corn down to 23.5. They also reduced the soybean crop coming out of Argentina from 52 down to 50.5 million metric tons. Kept the Brazilian crop the same, kept the Chinese production pretty much the same, but those numbers are certainly enough. But we've got to remember that that's what the trade was talking about. They expected big reductions across the board. In the U.S. main commodities of corn, soybeans, and wheat, we were expecting a reduction in the Argentina crop. We got that. The big question will be, where do we go from here? I think the initial reaction certainly will be positive. We're going to be higher this morning. The early calls are 10 to 15 higher in the corn, 15 to 20, 25 higher in the soybeans. And by the time we get to the opening, I would guess that these calls would actually be stronger than that. They did give us an increase in rice production here in the rice carryout for 2011. Other factors that really don't mean much at this point in time, but in the long run will. Argentina weather looks to be improving. There's more rain in the forecast there. The late models here have added more rain to the dry areas, so weather conditions improving in Argentina. That may help a little bit, but certainly the dominating factor is the news coming out of the report this morning, and we're going to see higher openings. I don't think there's much doubt about that at this point in time. The big question is going to be, can we sustain this strength? If anybody steps in and decides to take profits, it could mean a sell-off and maybe significant magnitude. As we went into this report being very bullish, the trade was bullish, the positions, people wanted to be bullish going in. We ended on a high note as far as trading ranges go. So looks like we should continue. The question is, and we throw the caution flag here, is look to buy breaks, but do you follow the strength here this morning? We would suggest to be a bit cautious. Other news coming out of the financial markets, things are fairly quiet there. The dollar is down about 20. Crude is up just a little. Gold is lower, down $2 to $4 as we speak. Stock market is higher. Where we are seeing some strength is in the livestock trade. We've got cattle 75 to $1 higher here in the nearby contracts on the electronic trade. Hog markets are anywhere from 30 to 50 higher on the electronic markets as well. Weather should be improving in the Midwest, so we should see a pickup in hog movement here, and I think that might weigh on this market as we get back to more normal slaughter patterns, clean up some of the inventories that we're unable to move because of the heavy snow and the blowing snow here in the last few days. So overall, looking for a sharply higher opening across the board in most commodities. We're already seeing that in cotton, for instance. That's up as much as $4 to $5 here on the electronic trade. So look for higher markets, and then once we get through working through the news and the positive report that we've seen, we'll go back to trading some of these other things. But looks like we're going to be higher to sharply higher here on the opening this morning. If you got any questions, give us a call here at Allendale at 800-262-7538. Thank you, and we wish you a very successful trading day. We'll talk to you tomorrow morning.